So I ended up selling some cash secured puts on AMC, and we closed these out now just a couple of days later, about 5 days later, for a $12,000 profit. This was a bullish position on AMC, and what's crazy is that this thing dumped 40%, and we still made about a 65% return. And so in this video, I want to explain to you guys briefly how this was possible, just through cash secured puts. So we're going to talk about what that exactly means, and we're going to touch base a little bit on AMC, the stock, and talk about technical analysis. The major reason that this was able to work so well is because of implied volatility. If you guys haven't taken our options course, it's completely free. You guys can go ahead and do so. Go ahead and link that in the description down below, and it's also over on our X account. But in that course, we talk about the Greeks, specifically theta decay and implied volatility. And so when implied volatility is massive, in this case, AMC's implied volatility on these contracts was about 800%. Normally, 80% is a bit high for me. So people were paying 8 to 10 times what these contracts were worth just because of the volatility. And as somebody who is selling those contracts to the public, all of that theta decay, all of the losses that that person would incur owning those contracts, therefore doesn't just go into thin air. All of that theta decay and that premium goes to me, the seller of the cash secured puts. And so this was a risky trade. If AMD had pulled back to $3.50 by next Friday, I'm sorry, I said AMD, I meant AMC. If AMC pulled back down to about $3.50 by next Friday, and I was still holding these contracts, I'd be forced to buy about $200,000 worth of AMC shares, which is not something I want to do. And as I said before, I wasn't necessarily bullish on AMC. I just felt that there was no way in hell that it was going to drop all the way back down to $3.50 within a week. Now, at this point, I am not bullish still on AMC, and I'm not going to be selling cash secured puts anymore on AMC because implied volatility has dropped a bit. And on top of that too, I don't think that we're going to make another test back for $10 to $12. I'm not sure. Roaring Kitty, that was a whole false thing. I haven't talked about that. And I don't know if some people have even brought that idea that all of these tweets and all of these memes and all these videos might not even be him. Might be him trolling, could be somebody hacking his account, whatever it is. But we don't see that type of posting normally from the guy. I mean, I don't really follow him, but from what it seems is that he hasn't posted since 2021, rarely posted that much back then, and now is just blasting the shit, out of Twitter basically every couple hours. And so at this point, I'm not going to be trading AMC. I'm moving on from this. I don't care to play it. And, if implied volatility does get back up to 800-900% and we get this push back up to $8-9, maybe I'll go ahead and sell some cash secured puts. But I wanted to share this with you guys because at the end of the day, having a proper strategy is extremely important, but understanding the economic landscape and knowing when you should be taking specific trades and when it's not a good time to take a specific trade is very important. And when implied volatility is through the roof, you should not be trading directional options. You should be sitting out, or you should be selling cash secured puts or doing some sort of spread. So I hope this video helped, guys. If you want to learn how to do all of that and more, plus get access to all my trades real time, go ahead and check out our Discord community. The link will be in the description. See you guys next time.